Howdy, beautiful people of the internet, and welcome back to the channel. Today we're going to be talking about which stocks you should be buying before the end of the year. Now the last quarter of the year is finally upon us, a year which hasn't been the easiest, but from historic performance we know that quarter 4 of any year has generally been good for the stock market. Especially right now in the times we're in, there are a lot of dynamics going on. On the one hand side we have global inflation going on and rising continuously. At the same time we have the credit crisis with Evergrande in China happening right now, which can have a domino effect on other economies in the world. And lastly, we're still in the midst of a global pandemic. So with all these factors together, we're still looking at a traditionally strong end towards the year. We're getting closer to Black Friday, Cyber Monday, and of course Christmas season is upon us, which usually leads to strong sales. So with these dynamics in mind, I'm going to be sharing with you a few of my favorite stocks that I'm really looking at and where I see big upside potential. Please be reminded, this is my personal humble opinion. Don't follow my advice blindly. It can go up or down, as obviously nobody knows the future. Which actually reminds me, the saying is, the future is shaped by your dreams.
So stop wasting time and go to sleep.
But of course only after watching the video and give it a like. Alright, with this let's dive right in. So the first stock I want to be talking to you is PayPal. Being on the internet, one way or the other, you probably came across PayPal or using it or used it to send money or receive money. It was one of the early companies that really defined the internet and up to this date is one of the biggest payment providers out there. When we hop over to Yahoo Finance, which is one of my favorite finance resources websites. So we start off looking at the 5-year trend over here. Obviously just 5 years ago it was only around 40 euros and is now at 259 euros. So really a massive jump. So it just shows the long-term potential of the stock. Just to have a look how it performed this year, obviously still in volatile times, but even there it really maintained strong. But it did flatten out since this year quite a bit. So I really do see a big upside potential going forward. As you can see, PayPal is really a growth stock. So they are not paying a dividend. So if you're a dividend investor, it may not be relevant for you. But in terms of growth stock, I really think it has a lot to offer. It currently sits at the 300 billion market cap. So just in comparison, Apple and Microsoft, for example, they're over 2 trillion. So that means it's only 1/7 of a company as Apple. So you have to ask yourself, do you see so much more momentum going forward? Which personally I do. And not only that, what gives me great confidence, how their revenues and their earnings, their profits are developing. And it's really nice to see that year after year they've been growing and developing their earnings and their revenues. And that gives me really confidence that they're on the right path, they're profitable, and going forward I can only see this getting stronger. Looking at the recommendations from the analysts, you can also see that it has a 1.8 analyst recommendation, which really is not often the case. So it really shows that analysts also see the long-term growth it can have. And here you can see the price target, which is basically the average of a lot of analysts' opinions. And on the low end side, you have $175. Currently it's at $259 and it can go all the way up to $380. So again, quite a big price swing. Upwards rather than downwards. What I always like to do on Yahoo Finance, I pop over here where you can see the holders and you can kind of see what's happening and what's going on over there. You can see, for example, the minority of the owners are actually insiders. Majority of the owners of that PayPal stock are actually institutions. So this really gives me, again, confidence that it's a good stock to invest in. When institutions like Vanguard, BlackRock, State Street, some of the biggest wealth managers in the world are really heavily investing in that stock, they wouldn't do that if it was so extremely volatile. So they have the confidence, and that in return gives me confidence that it is a safe stock to invest in with a big upside potential going forward. So hopping over to Seeking Alpha, which is another great resource and free website that I really recommend and I always check out before buying any stocks. And you can really have similar information like Yahoo Finance in a different way of presentation, plus a few different information that you don't find over there. So always have a look on various sites, and these are definitely some I always recommend. And very interesting over here, you can see the risk profile, short interest. So that basically says how many percent of that stock are shareholders that actually bet against the stock rising. They're basically short selling the stock, which basically means that they're hoping that the stock would fall in value because they will make money as soon as the stock drops. So the lower that percentage, the better, because that means less people are betting against the stock. We as normal investors obviously invest in order for the stock to increase in value. So if you have 30% of the stock owners betting against it, there are conflicting forces. You may have some large institutions or private hedge funds that bet against the stock and they will come up with PR campaigns. So there's bad headlines, people losing confidence in the stock, and overall it will tank and go down and they will make money in the process. So if it's less than 1%, I think that's really good people believe in the long term it will go up and they will not take the risk, because it is extremely risky, to bet against PayPal. Now, most recently, PayPal was actually one of the first major payment providers that went into crypto. So you can actually pay, send and receive crypto, and that really opens up a whole new area of revenue growth in the future. As crypto gains popularity, people are going to be using it more, and that will in the long term only increase further the revenues and earning potential of PayPal. Now on to the next stock, which is Coinbase. A fairly new addition to the stock market in the US, one of the largest crypto exchanges in the world, and it's been the first crypto exchange that has been listed in the US stock market, which once again gives me great confidence that it is, despite volatility of the cryptocurrency, one of the most safest and trustworthy organization that I use myself and invest my cryptocurrency through Coinbase. When Coinbase started earlier this year, it started off extremely high with a valuation of close to $342. And people were so excited in the middle of the crypto hype. Everything was going up, so everybody was extremely excited to buy into Coinbase. And from there, it's been a steady decline in value. At the moment, we're down at 225. So as we know, cryptocurrencies, same as stocks, go through certain cycles. Cryptocurrency obviously has bigger swings to it. And that's why it's natural that the value goes up and down, and very much is dependent on the value of crypto. If all the cryptos are down, less people are transacting, meaning less revenue for Coinbase. As things are picking up slowly again, it might take a few months, even years, but in the long term, they're going to be one of the biggest processor of these payments, of these exchanges, and as such make more profits from it. When we see in terms of market capitalization, they're only at 60 billion. So compared to PayPal, which we just saw around 300 billion, so that's still a fraction of it. So when we look at the long term, where the company can grow towards, Coinbase still has a long way to go to catch up even to the likes of PayPal. So that's why I'm quite confident that despite it's being low, and it might drop a bit further, in the coming months and years, I definitely see this coming back to $300, $400 easily. Again, looking at analyst recommendations, you can see here as well a clear buy indication. And here, quite interesting, the price target, once again, currently sitting at 225. With the low at 222, so we pretty much reached the low end of the predictions, but on the high end we're reaching up to $743, which is around the price of Tesla at the moment. So that's almost at 3x over there just in the next couple of weeks or so. Coinbase is a fairly new stock and it's a high growth stock, so that means that they don't pay dividends. Again, more established legacy companies, they tend to pay dividend stocks to keep their investors happy, but these high growth stocks, they basically don't pay a dividend because they rather reinvest in the company. The short interest, as you can see, it's 3.3. It's still not very high, but definitely higher than PayPal, because of course it is a more volatile company. There is more ups and downs. There are obviously people who are more bearish on cryptocurrency and as such bet against Coinbase doing well in the future. But 3.37% is really not that much and still gives me confidence that overall most people buying the stock believe in the long-term positive development of it. When we look at crypto, I mean, you know, there's so many articles out there that really say in the long term crypto is the way forward as the world is moving towards digitalization, how we're going to process our payments using smart contracts and so many other blockchain applications that are going to be facilitated through the use of cryptocurrency. So definitely Coinbase, something to look at. Before we move to the next stock, I want to take a second to thank our sponsor for today. So sadly there are none, but if you want to help out the channel, then really appreciate if you give it a like and subscribe to the channel. It means a lot. Thanks very much. Next up, we have Tesla. Now that's certainly not something new that you heard for the first time. Tesla had already a run in the last year and continues to do well. If you would have bought 5 years ago, the price was around $40 and currently is close to 800. So we're talking about a 20x return in almost 5 years, which is incredible. Yes, a lot of people say that Tesla is overpriced and overvalued, but again, it's very difficult to judge a book by its cover. Yes, when you look at the market cap, it sits at $782 billion. It is almost a third of Apple. But then again, you have to ask yourself, they're aiming to be the leading EV manufacturer of cars in the world. But not only that, they're going to have self-driving taxis. They want to build an entire ecosystem around cars and transportation as such. From the way we generate electricity, the way we store it, and the way we use it for cars and transportation, etc. So similar like Apple, they're building an entire ecosystem, not just a car. In the long term, that probably has even more value than somebody producing just phones. Tesla, like the other two companies we just looked at, of course is not paying a dividend because again, they're still early days and they're rather reinvesting these dividends to grow the company and move it forward. In terms of financials, they have been growing every year. Despite all the naysayers and doubters, they have been a tremendous growth in terms of revenues. And in 2020 was actually the first time the company turned a profit, and that's really great news for any investor and gives confidence that going forward they will continue to do so and only further ramp up their growth. There is a lot of raving fans about it and a lot of naysayers. So you have also some wild price target swings. On the low end side, it can go down all the way to $67, almost where it started a few years ago. On the high end side, it may almost double up to $1,600. Personally, I'm investing into Tesla. I love their products. I love the vision. I love Elon Musk. I think he has a great way forward. Yes, they're struggling at the moment with the chip shortage, like so many other companies do globally, but they're actually planning to develop and build their own chips. So I think in the future, they're going to be one of the strongest competitors coming out of this and will benefit from it. Short interest, again, is quite reasonable at 3.37. For such an emotional stock almost, where people have black and white opinions about it, it's fairly low. It used to be much higher, but all these people who shorted actually lost so much money that they lost their interest, and now the majority of people and shareholders really believe in the long-term growth of the company. With regards to the holders, you have once again some of the biggest wealth management companies in the world owning them, Vanguard, BlackRock. It just proves that they also believe in the long-term positive development of Tesla. Next up, with Airbnb. Just a couple of years ago, Airbnb basically came out of nothing, and the first hotel companies, they were looking at it and laughing at it and said, what, nobody would ever live in a private person's home. Why would they do this if I can stay in a nice luxury hotel? But reality proves them wrong. When you look at it, when it started not so long ago, only in December 2020, I actually started investing from the IPO. It had a bit of a roller coaster ride, but of course it was starting in the middle of the pandemic when a lot of travel globally was stopped and really reduced. So they definitely paid the price for it. But nonetheless, we now rebounded and sitting at $168 and brings it to a market capitalization value of $105 billion. Now in comparison, the biggest hotel company in the world, Marriott, only sits at $50 billion, so half that of Airbnb. Now you can say that's overpriced, but again, Airbnb has so much more opportunities to grow their revenue, because for them, they don't need to buy individual hotels and capital to grow these hotels and enter new markets. They can simply open up market by signing up new hosts to their platform and start earning commissions from it. Going forward, they also want to go into other travel areas as well as selling experiences, tours, local experiences, etc. So the revenue avenue is only going to continue to grow. Of course, you can see over here at the financials, revenue has been growing until obviously with the start of COVID, they have been hit badly, especially on the profitability side. But again, as we now see travel opening up, improving going forward, I do see this coming back, and that will only continue to grow the stock. And that's also reflected in the price analyst targets. Currently, as I said, it's sitting at $168. It won't drop too much as per the analyst at around 132 on the low end, and almost 50% increase on the high end to $240. Airbnb, of course, also a growth stock, so as such they're not paying a dividend, which is totally fine. And the short interest, it's even higher at 4.5%. But it makes sense because the travel industry is still very volatile. So some people might bet against it and say it will never come back to the level it once used to be. But 4.5 is still not too high. Anything under 5% I think is reasonable and shouldn't concern you too much. So all in all, as travel starts resuming, the world opens up, Airbnb definitely is the way to go, and definitely a stock I will be buying more of. If you're interested in buying any of those, check out the video over here in which I run you through the easiest way to buy it through Revolut. Within a couple of clicks and commission free, you can own any of those stocks. As always, thanks so much for watching, stay blessed, stay awesome, and I'll see you in the next one. Take care, ciao ciao.